Equities had a mixed day today on a Fed Wednesday. We saw the E-minis kind of creep higher ahead of the Fed announcement and then immediately go back to unchanged, only to kind of trade back and forth right around 3,400. That's kind of where they spent most of the afternoon. Didn't see a whole lot of momentum trades today that would take us one way or the other. Yes, we are still near the all-time highs, and yes, there is still a lot of bullish momentum in the equity markets, and the Fed didn't really do anything today to take the wind out of those sails. I think you're looking down at the 50-day moving average is really next support. That's right around 33.40. That seems like light years away from where we are now, and obviously we need some kind of news or catalyst to get us down there. At this point, hovering right around that 3,400 level post-Fed seems to be where the equities will call home for now. Obviously, we've seen them continue to rise. I think a test of that 35.87 high is probably right around the corner, but not today or tomorrow. It may have to wait until something around after the election. The VIX index post-Fed actually was creeping up a little bit higher. So there is some concern. You know, we're not talking about red alert levels in the VIX index hovering right around 25, 26. But when the VIX goes up, it does suggest that there is some kind of alarm. So I think watching the VIX is whether it goes up slightly or up a lot is a concern. So watch for the VIX here to be any kind of signal that there may be some cracks in the dam here. Certainly when you're looking at the E-mini S&P chart, it doesn't look like there are any. So when we look at volatility, we kind of read between the tea leaves. So seeing a modest uptick in volatility post-Fed today, a little bit of a surprise. And lastly, what did the Fed say and what will they do? Is really what the message was today. They're going to keep rates low for longer. Out to 2023 is the talk. That is one thing that will fuel stocks higher. They're going to continue with their QE programs. That is also very bullish to stocks. What isn't bullish to stocks is some of the economic numbers they talked about. Now, yeah, they could have been a lot worse. The projections, given the lockdowns and the pandemic, we could have seen a lot worse numbers. But when you're talking about unemployment being north of 7%, when you're talking about growth being negative, and when you're talking about the possibility that the labor market's going to take longer to recover, that certainly isn't bullish for stocks. But the fact of the matter is we're going to keep rates at zero for a long time, and that will fuel risk into the stock market. So post-Fed, it looks like things are going to be business as usual for equities, although it didn't happen immediately after. Tomorrow and leading up to the election, we'll probably see a bit of a bullish slow trade higher, and then after the election, it's a whole new ballgame.